Hello students, in this video we are going to see bank reconciliation statement. What is the meaning of bank reconciliation statement? What are the characteristics of bank reconciliation statement? And what are the different causes of the situation where cash book, bank column and passbook balances are not matched? That we are going to see in this video. Bank reconciliation statement. Business concern maintains the cash book for recording the cash and bank transactions. In every business, each and every transaction is recorded. Okay, that's why business concern maintains the cash book for recording the cash and bank transactions. Similarly, bank also maintain the account for each customer in its book. All deposits by the customers. Here customer means business account in the bank. Okay. All deposits by the customers are recorded on credit side of his or her account and all withdrawals are recorded on debit side of his or her account. A copy of the account is regularly sent to the customer by the bank. That copy is nothing but passbook or we can say bank statement. Similarly, accountant regularly tally the firm bank transactions as recorded by the bank with the cash book. Cash book is maintained in the business by the accountant, which is tally regularly with the bank transactions as recorded by the bank. Okay. Sometimes what happened? Sometimes these balances as shown by the cash book and that shown by the passbook do not match. Then there is a need to reconcile this statement or there is a need to reconcile and identify the causes for such difference. And for that purpose, bank reconciliation statement is prepared. Bank reconciliation statement is the statement to prepare to reconcile the difference between the balance as per the bank column of cash book and passbook on any given date. That is meant by the bank reconciliation statement. Now we are going to see what are the different causes of such situation. Okay, first and most important situation is checks issued but not yet presented for the payment. See, when check is issued to a third party by the business, it is entered in the cash book by crediting the bank account, resulting in reducing the bank balance in the depositor's book. But the bank debits the account, customer account, when the check is presented by the third party to the bank for the payment. Okay. When business issue the check, they will record that in the cash book. But if the third party is not depositing that check into the bank, then there may be the difference in the bank account of the business and the cash book which is maintained in the business. Second cause is check paid into bank but yet not collected by the bank. See, when check is received by the businessman from the third party and he deposit it in a bank, he will debit the bank account and credit the account of the third party in his own book, that is business cash book. His bank balance in cash book is therefore increased, but bank the credit that check not when it is deposited but only when that amount has been realized. Okay, until the check has been collected, the balance appearing in the passbook would be less than that balance in the bank column of the cash book. Then bank charges. Bank usually debits the account of the customers with interest on bank overdraft, collection charges, incidental charges for various services rendered by the bank. Okay. These adjustments are shown in the passbook as and when they occur, and hence the balance in the passbook decreases. Okay, and customers, or here we can say the business, comes to know about it when he collect his passbook and verify it. Okay, this is the another cause or reason for a difference. Then interest credited by bank but not enter in cash book. Sometimes the bank give interest on current account to their customers. Okay, if they maintain certain minimum credit balance in their current account. When bank allow interest to the customers, it will credit his account and his bank balance will be increased. Okay, but the customer will know about when he will receive the passbook or bank statement, and then he will pass an appropriate entry in the cash book. Okay, that is another reason, that is bank interest credited by the bank but not enter in the cash book. Another reason is interest on dividend on investment, interest or dividend on investment collected by the bank. See, businessman may entrust the task of collection of interest or dividend on investment, rent on property, etc. to the bankers. Okay, after the collection of this income, the bank will give credit to the account of the businessman and will increase his balance. Whereas there may be no entry of such transactions or income in the cash book of the businessman for want of information. Okay, that is the reason there may be the difference or increase in the balance of the bank account as compared to the bank column of the cash book. Another reason is amount directly deposited into the bank by customer. Okay, when any amount is directly deposited in the bank account of the businessman by customer, then the bank give credit to the account of this businessman immediately, and this result in an increase in the bank account balance. Okay, and the businessman will come to know about the deposit on receiving the advice from the bank or intimation from the customers. Until then, the bank balance will be shown more balance as compared to the balances as per the cash book. Okay, then payment made by the bank on behalf of client. Okay, the businessman may give standing instructions to make the payment of insurance, rent, license fee or any other payment on his behalf of when they fail due. On the instruction of the customers, the bank make the payment on the due dates and debits the client account. But the businessman enter the same in his books only when he receive the intimation from the bank or he receive the bank statement from the bank. Okay, till it is done, the two balances show the differences. Okay, another is bill collected by the bank on behalf of customers. The customer may authorize his banker to collect the amount against certain bill receivable from the acceptors or drawee as and when they become due. If the acceptor of bill receivable honor the bill on its due date, the bank will give the credit to the customer's account for the amount so collected. Okay, as a result, bank balance will be higher by that amount than the balance as per the cash book until the necessary entry in this respect is recorded in the cash book. Another reason is dishonor of bill or check. When the businessman send the bill or check to the bank for realization, he enter them on the debit side of his cash book and thus the increases the bank balance. But bank does not make any entry in the customer account if these are dishonor. Okay, this is another cause of difference between the two balances, that is bank column of cash book and bank statement or passbook of the customer. Another is rebate on retiring of bills. See, when the businessman make payment of his bill payable through bank or to bank before maturity, he is allowed a rebate on such payment by the bank. Okay, the bank credits the businessman accounts with this rebate. Thus, there will be a difference in the balances of cash book and passbook to the extent of amount of rebate. Okay, and then check paid into bank but omitted to be entered in the cash book. Sometimes businessmen would deposit a check into the bank but forgot to enter the same in the cash book. Okay, there may be the difference in the balances. Okay, another is wrong debit or credit given by the bank. See, if there is a wrong debit or credit in the books of account of the bank, then it also causes a difference in the balances of books of the customer and the bank. A wrong debit or credit may be given by the bank in following way, all in two different ways. Okay. Uh, Other account holder check wrongly debit or credit in the customer account by the bank, or recording of the entry on the wrong side of the passbook by the bank. This may be the two conditions in which wrong debit or credit given by the bank. These are all the causes or reasons for the differences between the balances of bank column of cash book, which is maintained in the business, and bank account of the business in the bank. Okay. These are the some characteristics of bank reconciliation statement. It is merely a statement, not an account. This is periodical statement. It is prepared on a particular date. On this statement is valid for the day it is prepared. The preparation of bank reconciliation statement is not a part of the double entry bookkeeping. The causes which are responsible for the disagreement of the two balances can easily be found out with the help of bank reconciliation statement. These are the some importance point of the bank reconciliation statement. With the help of bank reconciliation statement, you can easily identify the transaction dates. See, bank reconciliation statement ensures that the transactions are recorded in a proper period. Okay. Also, the bank only has information on when the money for the check is paid out, or the account holder has other information such as when a job or services was performed, or when a produce or a product was purchased. Reconciliation ensures that the account holder accurately records when an expenses is incurred, which is useful when the account holder is planning a budget. Okay. Next important point, importance of the bank reconciliation is fraud. Account holder can detect fraud through bank reconciliation statement. Okay. When the bank provide a statement, it provide a list of all charges to the account during a specific time period. The account holder may see charges that appear fraudulent. Okay. A bank statement lists the amount of each check and the holder compares this amount to the bookkeeping record during the reconciliation to ensure that the amount of the transaction is accurate. Another importance of the bank reconciliation statement is bank error. Okay, bank error may be detected during reconciliation. The bank may have overcharged the account holder or undercharged the account holder. The reconciliation provides evidence that can be used to explain an account error to the bank. Okay, then we can know the additional transaction also. A statement provides additional information from the bank about the balance of bank account. When the bank send out a statement, the statement includes fees which the account holder may not anticipate and possibly additional earning. A bank statement may include interest payment, account charges, note collection, notice of the insufficient fund, etc. Okay. During reconciliation, the account holder records these transactions to the proper account. And last and most important, importance of the bank reconciliation is available balances. Reconciliation provides the information about the amount of money in a bank account that can be safely spent. The bank statement provides the information about the incoming and outgoing checks are recorded in the account holder current balance. Also, the account holder risks receiving a notice of insufficient fund if he determines how much money is available to this spend simply by looking at balance and bank is available. As retailers and utilities may hold check from the account holder that they have not cashed yet. Okay, these are the importance of the bank reconciliation statement. Transaction date, fraud, bank error, additional transactions and available balances. This is the pro forma bank reconciliation statement. Now we are going to see what are the different steps have to follow for preparation of bank reconciliation statement. Bank reconciliation statement is prepared to identify the cause or reasons for the difference in the bank passbook and the bank column of the cash book. There may be some transaction in which we have to add that transactions to balance the both the statement, and sometimes we have to subtract that transaction that we are going to record in the bank reconciliation statement. See, for first step of the preparation of bank reconciliation statement is, first we have to tick off all the items in the passbook with the entries in the bank column of the cash book. Okay, and make a list of the entries are as are found, not tick either in the cash book or passbook. That is the first step. Okay, then untick items are responsible for the difference in the balances shown by the cash book and the passbook. Okay, second step is the balance shown by any book, either cash book or passbook, should be taken as a base. Okay, we can take any one as a base. This is a matter of fact that starting point for determining the balance as shown by the other book after making suitable adjustment considering the cause of difference. Then the effect of cause of difference should be studied on the balance shown by other book. Then in case the cause has resulted in an increase in the balance shown by the other book, the amount of such increase should be added. Okay, to the balance as per the former book which has been taken as a base. And if in case the cause has resulted in decrease in balance shown by the other book, the amount of such decrease should be subtracted from the balance as per the former book which has been taken as the base. Okay, and last step is, in case the books show an adverse balance, that is an overdraft. Okay, the amount of the overdraft should be put in the minus column. Bank reconciliation statement should then be prepared on the same pattern as if there is a favorable balance instead of there being an overdraft. Okay, this is a pro forma of bank reconciliation statement. We add the check issue or drawn but not yet presented for payment, interest allowed by bank or recorded not recorded in the cash book, amount directed deposited by the customers in our bank account, interest and dividend collected by bank on traders investment, checks paid into bank but omitted to be entered in the cash book, any wrong credit given by bank in the passbook. These are the some transactions in which we have to add that transaction, that is we have to return that in a plus item. Okay, another subtraction transactions are check paid into bank for collection but not yet, check paid into bank for collection but dishonor by the bank, direct payment made by the bank according to the standing instruction of the customers, bank charges and commission charged by the bank, check issue but omitted to be recorded in the cash book, any wrong debit given by the bank in the passbook. These are the subtraction items of the transactions that we record in the minus column. Okay, and CR balance is a favorable balance as per the passbook. Okay, this is all about bank reconciliation statement. Thank you.